Global debt just crossed $338 trillion, and it's growing by $115 billion a day. Not a year, not a week, but literally a day. That's about $20 trillion just in the last 6 months alone. Every major country is filled with debt. The United States, China, Germany, you name it. And we have reached to a point where the global debt is growing much faster than the size of the global economy. As of 2025, the global GDP is about $114 trillion, which means that the global debt is 3 times larger than the size of the global economy. The average interest rate on the global debt is 5 to 7%. The global GDP grows by about 3%, which means that the global debt is growing twice faster than the size of the global economy. Mathematically, this debt can never be paid off. You don't have to be a genius to understand that this is going to lead to a financial catastrophe. So if there is so much debt in the world, who do we owe all this debt to? Who owns all of this debt? Who is the puppet master behind all of this? And how did we end up in a situation when there is far more debt in the world than the amount of money that exists? We will answer all of these questions and many more. So if you're ready, give this video a thumbs up and let's get right into it. AI is transforming almost every aspect of our lives, from how we browse the internet to how we invest our money. But the biggest shift is happening in the financial industry. The more accurate your valuations are, the better investing decisions you are going to make. And that's why Moomoo, the sponsor of today's video, has a built-in AI assistant that provides you real-time brokerage data. It uses a large language model combined with Moomoo's rich financial data, news, and community discussions to help traders to make faster, better, and more informed decisions. It can summarize complex information from earnings reports, analyze market trends, and provide stock insights. It's fully integrated into Moomoo's trading tools and built specifically for traders and investors. Moomoo is backed by Futu Holdings, a company that is listed on the Nasdaq and trusted by over 28 million users all across the globe, from United States to Canada, Australia, Singapore, Japan, and Malaysia. There is $0 commission fee on stocks, options, ETFs, $0 contract fee on equity options, free level 2 data, real-time option chains, and advanced order types for traders who want full control. For a limited time, as a thank you note, you can get up to $1,000 worth of Nvidia stocks if you sign up and make a deposit using the link below. This is how the global debt actually looks like. This is how it's structured. At first glance, it looks like a complicated system, but it's actually much easier and much simpler than you think. A debt is an asset for some people and a liability for another. If you are the lender who is sitting on some spare cash, on some spare money, you can loan that money. That money generates interest, so the debt is an asset for you. But for someone else who borrows that money, a debt is a liability because he has to pay that interest. Maybe you have taken that money to buy yourself a car. Maybe you have taken that car to get yourself a house and you have to pay interest for the next 30 years. So it's a liability for you. The US has $38 trillion worth of debt. The way it actually creates that debt is by creating a treasury that is being sold to the banks. These are commercial banks. JP Morgan, Chase, Citi, you name it. And in exchange, they will offer the United States a loan. These banks are motivated to buy these treasuries. First of all, because they will receive interest from the US government. But secondly, which is most importantly, they know for a fact that the Federal Reserve is going to buy these treasuries from them and they will make a profit by selling them to the Federal Reserve. So it seems like the real puppet master is the Federal Reserve. The Federal Reserve is the central bank of the United States that has the authority to create US dollars out of thin air. So most of the treasuries will end up in the hands of the Federal Reserve. And now the interest that the US government will pay on these treasuries will go into the hands of the Federal Reserve. So the Fed created the dollars and now the Fed is receiving interest from the US government. It seems like the perfect puppet master evil that controls the United States. However, if you dig into the numbers, you realize that all the extra interest that the Federal Reserve generates from the US government bonds, it pays it back to the US government. It's basically a system for the US government to legally create money out of thin air. The only reason that the Fed cannot directly buy treasuries from the US government is to prevent the US government to abuse the power by overborrowing. But they have mastered this system in such a way where the US government can simply create treasuries and the banks will buy them for a fact, knowing that the Fed is going to buy them from them anyways. It's not just the banks and the Fed. Any American can buy the treasuries from the open market and receive interest from the US government. It's a debt. It's a piece of document. It's a piece of paper. I buy it. It says that whoever owns this piece of paper, the US government will pay it interest. So if I have some extra money, I can buy it and receive interest. US businesses, US companies, mutual funds can also buy them and they will receive interest. And that's why, for example, Warren Buffett is sitting on almost $400 billion worth of cash. That's not cash. These are almost $400 billion worth of US treasuries. And that's why Warren Buffett this year will receive almost $14 billion in cash from the US government. Last year, Berkshire made about 16 or 17 billion dollars. The US pension fund as well. When you pay Social Security taxes or the payroll tax in order to receive Social Security benefits when you get old, the Social Security system or the trust fund, if it's gonna have some extra money generated from the taxpayers' money, it will invest it. But it can't just invest it in Bitcoin. It can't invest it in real estate. It can't invest it in the stock market, because these are the pensions. They need to be able to turn that money into cash whenever they want it to be able to pay the Social Security benefits. So the Social Security Trust Fund only invests in the US treasuries and will generate and receive interest from the US government for holding those treasuries. This is how the vast majority of the debt in the system is created. The second part is that the banks don't just make money by loaning money to the government. They loan money to individuals like you. You can go to the bank and get a mortgage to buy a house. And now for the next 30 years, you will pay a mortgage because you purchased that house. And that interest will go into the hands of the bank. You might take that money and you might go and get yourself a brand new iPhone. That money will end up in the hands of Apple. Or maybe you're going to get that money and buy a car. That money will end up in the hands of the dealer. That dealer, that Apple, or that person that received that money from you, they won't be sitting on hundreds of thousands of dollars worth of cash or millions of dollars worth of cash. That money, one way or another, will end up in another bank. So they're going to go to the bank and deposit it in the bank. Now, banks have more money, so they can create more loans and generate more interest. The people who receive that money will deposit it back in the banks. So it's a never-ending cycle where the exact same amount of money just circulates, and that's why we have far more debt than the amount of money that exists in the economy. This is how the US system works. But all other systems across the globe work pretty similarly to the United States. Take an example of the British system. The UK has $3.8 trillion worth of debt, but instead of US treasuries, they call them gilts. They create the gilts and sell them to the commercial banks. The banks provide or offer the loans to the UK government. Then the Bank of England, which is an equivalent of the Federal Reserve in the United States, is going to buy those gilts from the banks, and the banks have made a profit on this transaction. All extra cash the Bank of England is going to receive from these treasuries or the investments that they have made will be paid back to the UK government. And the exact same thing happens over here as well. Every single Brit can buy the UK government bonds and receive interest from the British government. The UK government or the UK companies can do the exact same thing, receive interest, and the UK pension fund. All countries or most countries across the globe have a pension fund where people pay taxes in hopes that when they get old, the next generation is going to take care of them because now they have retired. And the retirement fund, which we can call it a pension fund, usually ends up with more money than the money that it receives because there are far more people working than the number of people who are receiving the pensions. All across the globe, pension funds are allowed to invest only in the safest investments possible. And besides just investing in the UK treasuries or the UK government bonds, they're also allowed to invest in the US government bonds. And that's why the British pension fund also buys US treasuries by loaning its money to the US government, because they can make far more money from the United States than the United Kingdom. And that's why if you pull out at the largest holder of the US debt, you will see the UK at the top of the list. Through the exact same system, the British banks offer loans to people in Britain. The people who borrow that money will pay interest to the banks, and the people will take that money and spend it on useless things from Amazon. Amazon in the UK is going to deposit that money in some British bank. The bank will end up with more money, and the exact same cycle repeats over and over and over. Because the United States government is such a stable, transparent, great government that wants to borrow all the money in the world, and it offers very generous interest rates, people in the UK can take their money and invest it in the US debt by loaning it to the US government through buying the US treasuries. So they will loan their money to the US government and receive interest in exchange. And most of the system across the globe work in the exact same way. Every single European country invests in the US debt. Other systems, such as China, are slightly different than the United States, but give and take very similar. The Chinese government has about $18 trillion worth of debt. Instead of creating government bonds and selling them to the banks, the Chinese government has the right to sell them directly to the Bank of China. The Bank of China are going to create the yuans, loan them to the Chinese government, and now the Chinese government has all the money in the world to build whatever China wants. But most of those government bonds also will end up in the hands of the banks. And now if you're in China and you have some extra money because you're such a successful entrepreneur, or you're a successful trader, or you're a successful surgeon, and you have all this extra cash left out there, you can take that money, give it to the Chinese government, and receive interest. And the Chinese government will pay you interest, and your money is working on behalf of you. The Chinese companies can do the exact same thing by buying the Chinese government bonds and receive interest from the Chinese government. The same thing about the Chinese pension fund. It works in the exact same way as any other nation. But because China does not trust much the United States, the Chinese pension fund does not invest in the US treasuries, but primarily invest in the Chinese government bonds. Chinese banks also offer loans to Chinese people. Chinese people take those loans, and people and companies will have to pay interest for borrowing that money, but most of that money will be spent on other businesses and other people. Other people will end up with a lot of money, will deposit them in the Chinese banks, and the same cycle repeats over and over. Because Chinese people and Chinese companies do a lot of business in the United States, a lot of money ends up in the United States. For example, all the dolls that are sold in the United States are made in China. They brought from China. So a Chinese company that brings stuff from China, sells them in the United States, earns some profit. The question is, what should I do with this extra profit that I just made in the United States? I can bring it back to China, or maybe I can invest it in the United States. I can invest some of it in the stock market, but I want a portion of that money to be very liquid. So I can buy short-term treasuries from the US government. So loaning that money to the US government for 1 month or 3 months. 3 months later, I will take that money. So instead of that money simply sitting in my bank account and doing nothing, within this 3 month or 6 month or 1 year, it can keep generating interest. And that's why China invests so much in the US treasuries. So if you pull out the largest holder of the US treasuries, you will see that foreign countries are the largest. For example, the UK invests about $1 trillion in the US treasuries. China holds about $800 billion of the US debt. Japan about $1.2 trillion. And that's why most countries ended up investing in the United States. In the exact same way, just like Chinese people investing in the US, people in the United States can invest in the UK government bonds. But because the UK doesn't pay as much interest as the United States, and the UK is not as stable as the United States, why would you invest in the UK when you can invest in the United States? But technically, you can do that. You can also invest from United States or from UK into the Chinese government bonds. But because China is not transparent as the United States, you're not sure about your investment. You can criticize the United States as much as you want. There is chaos in the politics. I absolutely agree with you. But whether you like it or not, The United States system is transparent. The Fed is, to a certain extent, is transparent, and you can literally see where the money is coming from, where it's going to, and the system is fairly stable. And there is an independent judicial system where if the government is not going to pay you, you can sue the government. If you're going to do something like that in China, well, good luck. Hope you get out of China safely. So this is basically how most of the debt in the system is created. Everybody owes everyone else. All that debt isn't owed to one single person, one entity such as BlackRock that controls the world, but rather it's basically people owing money to one another because the exact same money circulates within the entire economy. So every single dollar turns into multiple dollars because of that. Somebody borrows money from the bank, that person or a company spends it, that person will deposit that money back into another bank, that money will create more loans by giving it to other people, those people will end up spending it. So if you have one single dollar, because that dollar circulates within the economy multiple times, it turns into multiple dollars. And that's why there is far more debt in the world than the size of the global economy. Essentially, all money in the economy is debt. Every single dollar that enters the economy is debt. One way or another, if you look at the chain of how that money ended up in your pocket, somebody at certain point has borrowed that money. And theoretically, that money must be paid one way or another. The real question at the end of the day is that, is the $338 trillion debt is a problem for the system? Because all money is debt, debt has value because it must be paid plus interest. The only reason that the US Treasuries have value, it's debt, but it has value because you expect that money to be paid back plus interest that debt is going to generate. If that debt is not going to generate interest and won't be paid back in interest, then that debt has no value. When the bank offers you a mortgage and then takes that mortgage and sells it to an investor, the only reason that investor wants to buy this mortgage-backed security or your mortgage is because it knows that it will get that money back and plus interest that mortgage is going to generate. If the bank is going to offer that mortgage-backed security to an investor and that mortgage does not offer any kind of interest, why would that investor buy that mortgage-backed security? If I have $1,000 debt and I want to sell it to you, will you buy this debt if this debt is not going to pay any kind of interest and money loses value over time? Well, of course not. It's not profitable and it's not financially responsible. If the debt is not paid back, that debt instantly becomes worthless. Because all money is debt, if debt becomes worthless, then suddenly money becomes worthless. And if money becomes worthless, then doing transactions in the economy becomes worthless and pointless and impossible. And if doing business becomes impossible, then the entire economy simply collapses, which means that all of that debt must be paid back one way or another. And because governments have the best assets in the world, which are called the taxpayers, they're going to increase taxes or tax you one way or another to pay back that debt plus interest to prevent any kind of a default. If they don't do that, money loses its value instantly and it turns into a hyperinflation. It has already happened sometime in the past, such as in Germany, where money became absolutely worthless. When that happened, people couldn't do business and the entire economy collapsed. And rebuilding economy from scratch is actually very difficult and it costs far more than paying back the debt plus interest. And that's why most of that debt will be paid back by the average American, by the average Brits, by the average Chinese. So whether you like it or not, you will end up paying most of that debt anyways.